Go ahead.
Excellent. Thank you all for joining on the February 17th meeting of the Cedar Rapids Community School District Audit Committee. The first thing on our agenda is review and approval of our minutes from the January 20th meeting. Any discussion?
No, I didn't have anything. I approve. This is Janet.
Excellent. If could we have a motion unless there's a correction?
Sure, I can make a motion to approve the minutes.
Janet, thank you.
Seconded, Drew. Seconded.
Thank you. All those in favor?
Aye.
Aye.
All right, thank you. Dave, please pass along to Sarah. I like the way the minutes have been coming through. Very nice. Second on our agenda is, I believe this is the auditors from RSM.
Correct. Yep.
And they are going to review and discuss the district's annual audited financial statement. Chris and Jordan, I don't know who wants to take the lead, so I'll let you decide.
Yep, I'm on. I'll take the lead on this. We had discussed, I think, in the January meeting before we issued kind of a high level of the financials. So we did end up issuing January 18th, 2021, and then did present this presentation at the board meeting in January as well, which was, I think, the 23rd or 24th. So I will go through kind of, I guess, the high level or presentation that we did to the board, meet some, kind of address some high level, and then kind of go over the, required communications with that as well. So, Dave, do you want me to share my screen on the presentation, or you just want to scroll down?
I can just, this is what you're going to do, right? I can just scroll down. You just let me know.
Okay, yeah, that works. Yep.
Oh.
And a lot of this, like I said, will be kind of just a recap of what we discussed in January. But if you go to page 3 of the PDF, this is our auditor communications with school district officials. Our auditor responsibility is obviously to audit in accordance with generally accepted auditing standards. That means we need to issue an opinion on the financial statements. This year, similar to last year and the years prior, the district did receive an unmodified or clean opinion. And that is just stating that the financial statements are free from material misstatement. I will get into a little bit later the compliance standards that we audit under. That's on a further slide here. So each year, obviously, the GASB comes out with accounting policies. The district did implement one, and that was GASB 95 this year. And that was due to the COVID pandemic that allowed some relief in adopting other GASB standards. That delayed the implementation by a year to 18 months for all of those standards. Those upcoming standards that most likely will affect the district in a significant way will be GASB 84, a relook at your fiduciary activities, and then GASB 87, which is the lease standard. So we'll be working with management in implementing those in the upcoming years. Each year, management obviously makes judgment and accounting estimates within the financial statements. Those are included in that report to the board. Those this year included the depreciable lives assigned to capital assets, your assumptions used for your other post-employment benefits plan, as well as the net pension liability for your IPERS plan, pension plan. Your lost true-up payment, your local option sales tax, that true-up payment that comes at the end of November, early December, as well as the fair value of your investments. We obviously tested those estimates and determined that management made reasonable estimates within the financial statements. There was no audit adjustments and no uncorrected misstatements in the current year. We had no disagreements with management, no significant issues discussed with management, and there's no difficulties encountered in performing the audit. The next couple slides are just how the district financially came or ended up as of June 30th of 2020. For some reason, the 2020 total isn't showing up on this revenue slide, but that amounted to $256 million. So that did increase about $3.7 million or 1.4% in the current year. The main driving forces there are your local taxes increased by about $2 million, as well as your state sources. So your state aid that's formula driven increased by about $2 million in the current year as well. Your federal sources, those are all the revenue received from your federal grants and that we test as part of the compliance single audit. The next slide is your expenditures by function for all your governmental funds. Again, the total is not showing up, but total expenditures were $291,586,000. That might seem like a big increase in the current year of $47.6 million. The bulk of it is in your debt service, and that was mainly due to the refunding bonds issued. So you refunded old bonds with new bonds. So that's the refunded piece of that goes against as an expenditure in your debt service function. So that was the main increase for that. That was approximately $44.2 million that was redeemed in the current year. The next slide shows your enterprise fund or enterprise, which I believe is the daycare, right, Dave?
You got your nutrition. You got your nutrition fund, and your daycare.
Nutrition and
yeah,
and daycare. So overall, total operating revenues did decrease by 1.2 million. That was directly related to COVID and the amount of meals served and everything like that. Operating expenses did decrease by 200,000. Obviously, not proportionally with the operating revenues, and that was due to the district still paying the employees of that fund or those funds. Your non-operating revenue did increase by about 295,000. That is mainly related to the federal money that the child nutrition receives. They did receive some COVID CARES money in the current year, which drew the or caused the increase in that balance. And then that comes in at a change in net position of approximately 486,000 in the current year. The next slide is our compliance reporting. So like I said earlier, we are required to audit under government auditing standards. That's where we come in and look at the internal controls of the district. We don't opine on those controls, but we do, or we would communicate to the board if there was any material weaknesses or significant deficiencies that we found. I'm happy to announce that this year, similar to prior years, there was no material weaknesses or significant deficiencies in those control cycles that we did test. And then we do a piece of it for the state compliance each year. We did talk about these back in January. It's the certified enrollment. There was a deficit fund or net position balance. There was a deposit in excess of the depository limit policy of the district. And then there was a few interest rates that were not in excess of statutory limits that the district has worked to alleviate already. So those were reported in the GAS or the government auditing section of the compliance report. The next piece is a single audit. Since the district does expend over $750,000 of federal audit expenditures, they are required to have a single audit. That is where we come in and test the federal programs. And this year, based on kind of the formulas that are provided by the federal government, we tested 3. Those were the child nutrition, special ed, and the COVID-19 ESSER funding. That did account for approximately 55% of the total federal dollars expended, and each program did receive an unmodified opinion with no compliance findings reported. So very, very good job, very clean audit this year, as as the case of prior years as well. That's all I had. That's what I reported to the board a little under a month ago. So I just wanted to recommunicate everything to you guys.
Any discussion or questions?
Chris, could you roll through the instances of non-compliance quick? It sounds like the interest rates have already been reviewed. You just talk maybe 10 seconds on the other three.
Yeah, so the certified enrollment, that's where the district comes in and certifies what they feel or what the enrollment is for the year. Then the state comes back and says, no, we certify this, and then there's adjustments going on. So the state kind of tells us what that finding or that difference is that we report. That's just something that happens at every school year or every district in Iowa each year. So there's just minor differences. I think this year it was,
This was a much larger than normal.
yeah, this was 34.8 students was an increase this
And
year.
I can address that a little bit because this is a little bit normal, a lot more numbers than what we had in the past. And a lot of it had to do with our ELL population.
DLL.
ELL, English language learners.
Thank you.
You get some additional weighting, 0.22 weighting for every child. And with the transition last year to a new student information system, there was a glitch and they missed 174 kids, or something like that were missed on the count for the English language learner students. And so there's other adjustments in there, but that was the bulk of what caused the big issue with a certified enrollment. Typically, you'll get a certified enrollment adjustment that may be less than 10 if we have any adjustments. But this was a larger amount, and it had to do with a glitch in how things got changed over between our old Power School system that we did have to Infinite Campus system. And they were listed in there, but it was some box didn't get checked, and so it didn't populate in the right spot, and then they just didn't catch it. And so we put some things in place to make sure that we do a review of does things seem, correct, because 174 drop in student enrollment should have raised some red flags, but we have put some things in place to make sure that, hey, does that look right? Because it was an issue that there's a request for some additional staff, and I'm looking at the numbers and I say, why? Because we reduced students in ELL, and they're like, no. And we started digging further. Well, they didn't, but it didn't get counted. So that was a good part of the certified enrollment.
And excuse me, but consequently, did we lose money by not reporting those students?
We get that the following year. So they'll come onto our funding for next year, those 34 kids.
So you'll be able to correct it.
Yeah, they
Okay.
yes. You're always a year behind of everything. So we last year's funding was reduced by 34 kids. Next year's we'll get an additional 34 kids funding due to the enrollment correction.
Okay.
And then the other one, anytime there's a deficit net position, state code requires that we communicate that as a compliance finding. That's in the daycare services fund, and that was mainly due to the implementation of GASB 68 and putting on that net pension liability that caused the fund balance kind of to go negative there, and that's a negative $836,000 as of year end, and it actually got less negative in 6/30 of 19. It was over $1 million, so it has been decreasing year over year as well on that. And then the deposits in excess of depository limits. The district has a policy that I believe the deposits at any one given institution will not be over $100 million. This was just kind of a timing as of year end at U.S. Bank. I think it was just over that, or there was a timing issue with some reconciling items where, right after year end, it did go under that $100 million. So, but as of year end, it was still over the district's policy on that. So that was pretty much self-corrected right after year end.
I sent thinking of time, this meeting, I don't really think it's appropriate. And a lot of it's my own ignorance. I've sat for a lot of years listening to the report on the child care fund and the effect of Gadsby. Is it 68? Is that what it is with the pension liability?
Yeah.
I mean, it really bothers me, but I don't have the knowledge to know if it's something that I should not be so concerned about. So sometime in the future, can we carve out a little piece in the agenda just to go over it? Maybe all of you who have more knowledge in this area than I do are comfortable. I'm not uncomfortable with it. I just would like to have it explained to me again.
Yep, not an issue.
Okay.
We can do that.
Any other discussion? All right, then. We'll move ahead if everybody's comfortable with that then on our agenda. The next up is Brent, who joins us again. Thank you. And
Thank you.
He's going to go over, I'll let you set your pace, Brent.
Sure, thank you. You probably won't take the 15 minutes because it's an update. When I was with you in December, we talked about the audit letter that set out the district's pending claims and litigation. And obviously that was part of the process of the audit that has just been addressed with the board last month and with the committee here in the previous agenda item. Just wanted to make sure that the committee was aware that there's ongoing monitoring of several different things throughout the year. And in this season, we're doing some things. So the Policy Review Committee continues its ongoing work with reviewing and updating policies. As I'd mentioned in December, there had been work on the 700 series, which deals with fiscal management. With the Policy Review Committee, we'll also be taking on some policies in the 800s that deal with the school plant. Some typical types of policies that we review during that process are the sale, lease, and disposal of district property, and also the bidding and award of contracts. And so I just wanted to make sure the committee was aware that we're continuing to follow up and making sure that those are reviewed and updated according to the legal timelines that are out there every 5 years or as necessary. If there's legislative action or other legal impact on policies, we're always in there working to update and revise as necessary. As was mentioned as part of the audit report too, we continue to work with the district in regard to the COVID-related ESSER fund issues, looking at the allowable use of those federal funds. It's kind of a work in progress at this point in time in terms of what additional funding may be out there depending on what potential additional stimulus packages will be passed by the Congress, but we're in the process of working through those issues and staying up to date on those things. And then obviously with the Iowa legislature being in session, we're continuing to monitor any proposed bills and how they may impact the district, especially in terms of the district's finances. We're looking at supplemental state aid here. Obviously, is something that the legislature has to set. It appears that that's going to be 2.4%.
Yeah.
Doesn't necessarily mean that the district's going to get 2.4% in new money because there's a formula there that is based upon the district's enrollment. So we'll need to wait until that's confirmed, and then that will be important to prepare the budget for the next school year and to deal with negotiations and deal with employee raises going into the next school year. Those are the things that we're monitoring at this point in time. There really isn't anything else officially to report, but I wanted to make sure the committee was aware of what's being done to stay in line with additional guidance and direction that we're getting from Congress and the Iowa legislature that would impact the financial position of the district.
Brent, do you have any insight of potential legal issues that the state might be in with regard to the $30 million, what they were talking about, potentially additional allocation to the schools that would be, and they were going to try to keep Des Moines public out of receiving those funds. And then
yes.
there were some concerns that it was kind of being based on the number of days that the schools were in session in person in the first half of the year. And we're not even sure that there's anything that's built in that for derecho because of our issue. And we have a lot less days that we have than because we had to delay opening till September 21st, and typically we would open August 24th. So, I think there's, if they do pass something and they try to limit, I would think there would be some legal standing for school districts to file suit against the state. But I don't know if there really is or not. But I didn't know if you could share any insight on that.
Yeah, that's a great question, and an issue that is very significant for the district, and it's certainly unique to Cedar Rapids and the other few districts that were within that exception for derecho damage. You would hope that there'd be something that would be built into any type of legislation that would acknowledge that specifically, but the district would have very good legal standing because there's specific exemptions in prior governor disaster proclamations dealing with the derecho and the counting of those days. So that would be the legal footing that we would use if there wasn't a specific exception that was built into the legislation through amendments or through a proposal that would differ between the House and the Senate. Remember, nothing can go to the governor unless the House and the Senate versions are basically identical. And so we'd want to make sure that there's advocacy at the legislative level, but we're also anticipating if there isn't something specifically written into that legislation that we would leverage the governor's prior proclamation, which did allow for a specific exception to the provisions in Senate File 2310 that talked about brick and mortar in-person learning and how you'd go about approving remote instruction. And then clearly we've got the in-person Senate File 160 that had just been passed that just went into effect on Monday. So all those factors coming together, we'd certainly lean heavily on the governor's prior proclamation, allowing those exceptions for derecho damage and the districts impacted by that. But I would hope that there would be something more explicit in the actual legislation so we wouldn't have to use the governor's proclamation to try to justify an exception of that nature.
Yeah.
Thanks, Brett.
Thank you, Brett. Any questions for Brett?
When we're talking about SSA real quick, I think this might be very applicable for the committee to have an understanding as well.
And Dave, please define SSA.
Okay, Supplemental State Aid. That's what Brett was alluding to, about 2.4%. That's being talked about by the legislature right now for Supplemental State Aid. That's the amount that additional that we would get per pupil for our kids. Because we actually had a loss of enrollment, 614 FTE of students, not FTE, full-time equivalency of students. Our funding would actually go backwards unless there was a budget guarantee. And the budget guarantee is something that's built into the formula, the state formula that allows for school districts to get at least a 1% increase in funding if they have declining enrollment. And because of our declining enrollment, we would have needed to get a 4.8% SSA to get us out of qualifying for budget guarantee. And the budget guarantee comes back as 100% property tax to the, if the board actually approves the approval of the Supplemental State Aid budget guarantee resolution to get that additional 1%. that requires a board resolution. But if the board does that, it's 100% property tax. So at a 2.4%, it's roughly a little over 40 cents on the levy for that amount. I just kind of want to have everybody understand how the supplemental state aid impacts us. And because our budget enrollment, there is something different for the district we haven't dealt with in quite some time with a budget guarantee, because they have set it high enough. We've been close. We've had situations in the last, 10 years where we've been very close to being a budget guarantee because of our the low SSA that the state has given, or enrollment decline that we might have had in the past. But we've been at 1.1% new money. We've been at 1.2. We've been at 1.3 in the last 7 or so years. And so this year we will be on budget guarantee, but I thought that would be interest to the committee. We're talking about SSA.
In the way that was set this year too, I think there's in the neighborhood of 40 some school districts that are going to be having a similar experience to Cedar Rapids. And even though the supplemental state aid percentage last year was 2% and it's 2.4% this year because of declining enrollment, I think the overall allocation by the legislature to schools across Iowa, I think, is down in the 50 million range. Would that be the ballpark there, David?
Yeah.
Yeah. So, I mean, this is, nothing, unique about Cedar Rapids. It's enrollment driven. And there's several other districts that are having similar experiences. With the size of Cedar Rapids, obviously, then it becomes more an issue of the magnitude of the impact because of the numbers.
I think the actual number is pushing 140 school districts in that range.
Sorry, did I say 40? I meant 140. Sorry.
Right. Yeah. So,
I mean, it's over a third of the schools.
Yeah.
And to help people, I hope, who are new to the committee, this is not numbers that, if suddenly our 600 odd students suddenly reappear in the classroom tomorrow, that doesn't affect our funding at all, because it's at one point.
Yes.
Okay.
And we're always a year behind.
Yeah.
So,
And in the supplemental state aid, it used to be called allowable growth. So you may have heard those terms interchanged at one point in time. Supplemental state aid is now the current terminology that's used, but the concept is the same or very similar, I should say, and it goes back years and years and years. Basically, how school funding has been dealt with in Iowa for a long time.
It to me, and without any comment on it one way or the other, it just seems to me that the legislature is spending a lot of time dealing with issues that affect school districts, not only because of the money and then the whole idea of the charter schools, but also just right down to the curriculum kind of things too. And I don't know whether it's more than usual or it's just that I'm paying more attention to those kinds of issues.
Well, and something that actually impacts the district, maybe not directly financially, is, and that's a great point. You're seeing more and more what we're referring to as unfunded mandates.
Yeah.
So requiring the district to provide additional services without any funding to help the district defray the costs of having to provide those additional services. And so that's something that we're always watching because of not only the impact to the district, but obviously that causes potential additional costs in terms of personnel and other service-related costs.
Any other questions for Brett? Of course, I have one other question, if I may. That when you said you were reviewing the contracts, that's just part of our the regular review process of policy. And the reason it caught my ear was because of the new buildings and things. It is just part of the normal process, correct?
That's correct. Yeah. The board policies have to be reviewed on a 5-year rotation. Now, if there's a change in the law, obviously we're going to review them in a much more timely manner than just waiting 5 years if there's something that we need to address. But the things that I mentioned were just all part of a regular review. Last year, we reviewed some things in regard to the fiscal management policies because of some state auditor opinions that had come out. And we wanted to make sure that we were compliant with that. And there were some adjustments made to clarify some issues in regard to public use and things like that. But mostly it's a routine review.
Thank you. Anything else? Well, Brett, you stayed right in the time. I'm very pleased. Thank you so much.
Thank you. Thanks, everyone.
Thanks. Okay. We're going to be moving along now to agenda item 4, which is review and an approval of the engagement letter for RSM. And this has to do with the activity fund audit. And just, Dave, could I ask you, and also Chris and Jordan too, if you to define for new members again what the activity fund is? Funds are. So who would like to take this?
I guess I can. And then Chris, you can jump right in. Our student activity fund is our students' co-curricular types of activities that they're doing. Non-instructional, but co-curricular activities. That includes all the different clubs, the different sports, and all those types of things. The POM, the prom, class of 2021, class of 2023, all of those types of things are accounted for in the student activity fund. And the student activity fund is a totally separate fund. It's been identified as a separate fund. It's totally separate. And typically how we report and how we track things, we always track things on types of clubs that they have. So you have a balance for every type of club or sport, and you're tracking all your funds in that manner. You have a beginning balance, revenue, expenses, ending balance with all of those funds. Previously in KEV, it was done in KEV. It was they still had those, but it was listed differently. Their buildings, they use like verbiage to track for everything, and we're having account numbers now. And and then when we got information over into our finance system, it was basically one lump sum numbers for each, for all of our student activity funds in total. That's what we reported to the state. Now, since it's in Grant Wood, it's broken out and tracked by school, by type of activity.
Great. Good. All right, the engagement letter.
All right. Last time we talked about the engagement, we really looked at our spring AUP of 2020 as our guiding document when we walked through this last time. This time, we talked about some of the things that we wanted to change. I asked Chris and Jordan to say, hey, can we actually take the document and then do a cross out so we can actually see the changes that we were proposing, and we can kind of go through that as we speak to make sure that we're all on the same page from where we were. And obviously, we didn't do a cross out on the date here because this will be actually from January 1 to March 31 is the time period which the review will take place of. And that's typical. That's a typical, which would have been done in the spring of any other year. Is that time frame correct, Chris?
Correct. Yep.
Yep. And Sherry, feel free to jump in anytime as well. So a lot of this stuff is not changing here. So when we're going down into other than date, we're going down into the actual the attachment, which is basically talking about the changes that we were actually doing to be able to do for the review. So right now, we talked about the last meeting that we were just basically going to talk about the middle school and high schools and not really do anything in Kingston Stadium at this point in time because the Kingston Stadium was very low, wasn't used much, and we don't have a lot. If we did anything, it was in this fall, which is highly used. In the spring, it's not used as much. There's not as much activity running through there like it would be in the fall. So we're just doing the middle schools and high schools. And so then we talked about scratching number 1, which would agree to cash investment reconciliations to general, ledger and bank statements for these periods. we do all the reconciliations here, and it's going to follow the same process. So that's why we decided we were going to remove that one at our last meeting. And please, anybody interrupt me, at any time here. And number 2, we are looking at doing our, select 3 receipts and 3 disbursements. But actually, we should scratch disbursements too, because we're not doing disbursements. We're only doing receipts, correct?
Correct.
And it's not from Kev, it's from Grant Wood. So we're not doing anything with disbursements. We're just really talking about our revenues or receipts. So we missed the cross out there, but we'll make sure we get that taken care of. So we're going to be looking at doing all of this here that we talked about last year or last meeting. And this will not change. They will continue to do that for all the receipts. And then we're going to scratch the disbursements. And then we're still going to try to collect the full 100 receipts if we have that many. But we just don't know. Our intent is to do that at each location. And but we were also no receipt. I had a lag error from the prior procedure performed for the period. Okay, since we didn't do anything in the fall, we're not. Yeah. That's why we're scratching that. Since we didn't do anything in the fall, so we didn't have in the fall, we're not doing that in the spring here.
So mainly, basically, that stuff's going to just make sure the lag time between the 3 areas: the bookkeeper, the teacher, the bookkeeper, and then the district is all in line with policy.
Okay.
We talked about scratching number 4, which is general journal adjustments. All journal entries, all the entries actually happen from the ELSC now here. And so there's no, that will be reviewed in the annual audit with all other funds that happen. We're going to still keep the inquiry of office personnel at each of the schools. We're going to keep that in play.
Yeah.
I think that's important. The comparison of the cash balances by the prior year amount. We actually, that's a part of the annual audit too. We will double check any differences, and obviously there's going to be some huge differences, especially if you compare the fall of last year to the fall of this year with some of the sports like football. You're going to see a drastic difference when you're looking at the differences, but that is typically will be done at the annual audit. So.
Umbrella accounts relate to the old financial software Kev.
Okay.
So item 7 is really irrelevant.
Irrelevant, since we track everything by
project.
Yeah. Yeah, we'll keep the item number, this one here, item number 8. Making sure that the cash and checks and gift cards are given to students, if that actually happens, that will be kept. Number 9, that will be.
Any invoices due to the district are immediately paid. They're no longer going to the school, waiting for the school to cut us a check.
Yeah. Those are the items. Now, that we were changing. Now the fee, where was that up here?
It's in, it's page 1 of that letter, isn't it?
The fee would have been, Chris and I talked a little bit about this. The fee would have been based on the schedule increases that would have been in place from what was previously agreed upon. And that would have been what, 4,000? What?
I think 4,200 was what was under the contract.
Yeah. And since we didn't actually do anything last year, And because they are still going to go out to all the schools, still having to do that, and they're going to be on site, and then pulling our number of receipts. We expanded the number of receipts was a couple years ago, significantly from what we did in the past, and that's the bulk of the work. We're going to ask them to continue to do. So we talked about, okay, dropping it instead of a 4,200, it's 36, is kind of where we landed. And I don't know what the community's feelings on that is, but that's kind of where we end up landing on the fee for this review.
But 3,600, but just sitting here now, we've already cut what the first item, was that the one we did? We just said we wouldn't be doing that, Dave? Would that change the fee, anything at all? Can't remember what it was now.
Yeah, the reconciliations, we do that here on a monthly basis and do all the reconciliations. So, and that will actually be done at the end of the year as a part of the audit.
Okay. I didn't know if that would have any effect on the 3,600 or not.
Yeah, I think the other
No,
piece.
the bulk of the work is in this 2A and the testing 100 receipts and then going out to every school and inquiring and everything like that. So the ones we, Dave and Sherry we come to conclusion on removing, they do have some hours, and that's why we wanted to reduce the fee and work with Dave on that. But the bulk of it is in those ones that we did keep.
I think, Dave, what Maureen was referring to is when we were looking at what is now one, that we were originally doing 3 receipts and 3 disbursements, and now we're just doing the 3 receipts.
And actually, that was just a verbiage change. The disbursements down below in 2B, they were already crossed out. It was just that the wording up above 3 disbursements needed to be removed.
Okay.
Is there, I guess, Chris, Dave, do we need to look at 100 receipts? Does that, if we did 50, are we getting the same evidence? Are 100 receipts overkill?
Well, and we had a good discussion on that because, we allocated it, we allocate those 100 receipts by receipts per school. And we wanted to get enough of a sample size to make it worthwhile that, we weren't just testing 3 at a school and those 3 were fine, but there's bigger issues that we didn't catch or anything like that. So we wanted to keep it high enough to where statistically it made sense. But obviously that's up to you guys as well on what you feel your risk areas are.
The hard thing about this too is not only did they change the process at the school level too, is this is such a different year. So it's hard to tell, at least for me, when I think of it without the expertise the rest you have, it's hard. This is a different year too.
There's one comment here, and maybe as the new member here, maybe this is a stupid comment or question, but personally, I'd be more interested in the internal control environment. And I don't see this test really giving us any insight into what the internal controls look like here. Very much a point in time thing. Where would we get the insight into what the internal control environment looks like?
Well, that would be part of the financial audit, and our government auditing standards are required to look at the internal controls. So anything that would come out of the processes that your student activities would kind of fall into that category. And we would report it under the financial audit piece. But this, like you said, Chad, this is very point in time, very specific procedures over receipts and whatnot.
And Chad, it is kind of touching internal control to a certain extent because we have a part of our internal control is these following the correct procedures and process, and that's on the receipt side, and that's what they're auditing, and will raise any issues they see because if they're not following the process, the procedure that we have in place, because they're not here, they're at the building, they're testing some of that, and they will raise any red flags, anything that is amiss, and that's part of our internal controls as well.
Mhm.
So, on the receipt side.
Okay.
Thanks, Chad, for asking the question. Anybody else have some comments or discussion?
And Chad, and we have contracted, I believe, before my time here, but a full internal control review. Correct, Chris? I think it was. I don't remember. Or
I
Sherry?
believe so.
I can't remember what year that was. I know it was
Before my time as well.
But so I know we have done that, and we can do that in the future too. At some point in time, we wanted to in the future as well. So.
Sherry, do you have any idea when that was done? Was that in the last 6 years?
I'm actually pulling my file. And I'm not certain if you were talking about the review that we did before Steve Graham left.
I'm thinking so.
Okay, so that was just a few years ago. And that was a total review, went through cash. It was a pretty thorough procedure that was done. And yeah, he left in 2018. So it would have been probably March of 2018.
Yeah, okay.
Yeah, I think it was the first, the result of that actually came to the audit committee the first time I joined the audit committee.
Oh, when you came to the meeting that one
Yeah,
time.
the first time.
Yeah.
Okay.
Yeah, it was a actual accounting review, and it was directed by the audit committee.
Okay.
March 23rd of 2018 is when it was presented back to the audit committee from RSM.
And maybe that's something that with the current audit committee, maybe we want to review that with the committee at a future meeting and just kind of say what was raised at that meeting. You know.
And maybe another suggestion, if I may.
Yeah.
Going to our new software, going to Visions, we've always talked about having the auditors come and review internal controls at that time, knowing that we're going to new software. There will be different procedures set up. Duties will be switched around, and it would be great as we go into that to know that the auditors are satisfied with what we have set up for internal controls. Maybe that's all a piece of that.
You know, that's an excellent comment too, because as we look at this engagement letter, we all knew going into this that we were going to have to change something based on going to the new software procedure, whatever you want to call it. Maybe that would be an angle too, but I want to ask something that has concerned me too, especially listening to the discussion of the SSA and things is, Dave, who decides how much money to allocate for the audit? I mean, that's the thing that I worry about. We already don't have an internal auditor. I want to make sure that whenever the budget is put together for the district, and I'm not saying the committee should have input, but I'm thinking I want to make sure that we have enough money in our budget or in the budget of the audit committee to be able to do what we think is necessary.
Yeah. You know, the obviously the main expense, the big expense is our overall audit that's done, and that's the main expense. In actuality, that goes out for RFP here. We'll start that process in October, November of this coming up for the RFP moving forward for our audit. That's the big piece. And so obviously, if we want to do an additional an additional review or audit, yes, that will be an additional expense that will have to be absorbed in the budget and money set aside to be able to accomplish that. And, on that side of things, we do what we call a budget scorecard and those types of things when we actually do things. We have, we're redoing our website, for instance. Through that process, we allocated $80,000 to help with our website redesign. And so that, if we feel like there's some additional things that we need to do, we'd probably go through the budget scorecard process to be able to say, okay, we think we need to do this, and it's going to cost an estimated $20,000, $30,000, whatever it might be to do that process. But I'm not sure if it's something, not that significant at that amount. If it's, under $10,000, it's probably not something that we'll probably do the budget scorecard. I would reallocate funds myself to be able to cover that.
Okay. And I'm sorry to have diverted that. I mean, I know right now it's this engagement we're talking about, but when we begin to look at how do we best replace this, if the committee should decide what we do, and then do we have enough money for it? Does anybody else have any discussion in the engagement letter or the cost?
And also keeping in mind that we did not pay for an agreed upon procedure last fall.
Correct. Yeah.
Do we need a motion to approve the engagement letter as written?
With the minor changes that we pointed out, where we had to strike in number one.
Yes.
And the disbursements and the KEV system got changed to Grantwood AEA accounting system, financial system. So.
Okay, I'll move that we accept the engagement letter with the corrections we just.
We have a motion. Any discussion? Do we have a second?
This is Whitney. I second.
Thank you, Whitney. All those in favor? Aye.
Aye. Aye.
Opposed?
Aye.
All right, then. Thank you very much.
And Dave, I sent that change to our report processor, so I should be able to get you an updated one here within the next half hour.
Thank you so much.
Yep.
And Dave, and Sarah, if you guys could make a note to that we go back to discuss the, I can't think of the word you used right now. I'm sorry, a different kind of audit, a thorough audit or something like that in our next agenda sometime. Moving on to number 5. And I think this is when we're going to hear from Jordan and Chris about the experience qualifications of the independent auditors.
Yeah, so attached is our bios. As you may know, or might have seen, Jordan's bio is not included in this. And I had talked to Dave last week. Jordan has put in his notice. He will be leaving the firm here shortly. He got a great opportunity to go into the private world of accounting here in Davenport. So he had put in his notice, later last week. Me and Dave talked. We wanted to notify the board of this, or the audit committee and everybody to that nature, but still wanted to give the bios out for the team that we know will be serving the district. So we are currently kind of working through the process. Jordan had a lot of government clients that I've been trying to, work through the process, get him replaced on. So we're still working through that. And once, we have a manager set in stone, if that's either from the Davenport office or the Cedar Rapids office, we'll make sure to communicate that and their qualifications to the audit committee as well. So, as you have attached here, just the qualifications for me, or my bio. As you all know, I've been with RSM for about 12 years now. Spend most of my time in the government arena, serving anywhere from school districts to cities to counties, to special purpose districts to tribal audits. And then the next one we have is the in charge on the engagement, and that'll be Tebble. She was on the job last year, and a little bit of history that you might know. She actually worked with RSM, moved into the private world, and then has come back last summer. She came back. So she does have about 10 years of experience working in the private and public sectors. So we felt it was a good opportunity for her. She works in governments a lot. She came back last fall and was immediately placed on, 4 or 5 governments to date. So she's looking to move up in the government arena and be kind of our in charge out of that Cedar Rapids office. So those are the 2 individuals we have set in stone now. Heidi, as usual, still with the firm. She is always there to help as well, kind of, bounce knowledge off of and everything like that. So any questions or concerns or?
A loss of Jordan, that's for sure. But anybody else have anything to ask? Actually, it's aside from the fact that changing Jordan, it's not so bad to have other people come into working on an account, I wouldn't think, anyway.
That is correct. Fresh set of eyes is always a good, a good thing to have in the audit world. So, having a new manager come in, maybe might notice things that, we've done year over year that we can gain efficiencies in, or see something different in the way the district does something, or, provide added value to the district. So, although we hate to see Jordan leave, and he was a big part of our government industry, it's a great opportunity for him. So I'm happy for his career path.
Yes.
It's almost like automatic rotation. I know that Maureen has heard through the years how we look at rotation of staff, especially in the auditing firm. I did just want to mention, I'm sure that there's no conflicts and enough time has passed, but Tebble did work at the district for 3 years back in 2015. She worked in the accounting office and in the food nutrition office.
Okay.
And that's it's far enough past that there's no conflicts on our end, but obviously that's a great thing. If you feel there's any conflicts on your end, we're more than happy to accommodate.
There are other members that you don't have listed here that will probably was with us last year in a couple of years, like Danny, Giffels. Will he still be on the team? And
we're going to try our best to keep that the same people involved. Public accounting, there's always turnover, as you can see with Jordan. So we're trying to fill in, other jobs that may have had turnover as well with in charges and stuff like that. So we're working through those issues now. Hopefully we can get a schedule here in the next couple months to communicate that to the district as well. But okay. We look to keep the same, our main goal is, start people off as staff, move them to in charge, and then keep them, keep that involved within the same client. So you guys don't feel the pressure of new people coming in asking questions that we may already know.
Okay. So what you're just sharing today is just the for sure people right now.
For sure. Yeah.
Okay. All right.
When it's final, Dave, and you communicated to Dave, could you pass it along to the committee as well?
Yes, we
Thanks.
will make sure that once I have that information, I'll make sure that we add that to the agenda to at an upcoming meeting, and we'll just report that back out. So,
Thank you. All right, then. Any other discussion on this? Okay, moving along to, I think, we had 6 on the agenda. We're going to have some background information on RSM again.
yes.
Yep.
And Chris, you're taking.
Yeah. So. Yeah. And usually with this meeting getting pushed up, usually we present I believe the arrangement letter for the actual audit at the March meeting. So with the timing of this getting pushed up when the last audit, completed, we haven't had time to get that arrangement letter through our normal process internally. So that will be coming in the April meeting, Dave, I think we talked about.
Yeah, this one, that one, but this one's a peer review.
Yep. Yeah, and that's where I'm getting to. When you review the arrangement letter, you will also see the peer review report that we get. Triannually, we are required to have a peer come in and pretty much audit us to make sure we are in compliance with the auditing standards. Our peer reviewer is BKD. They came in for our year ending April 30th of 19. And throughout our firm did, I don't think they actually say how many they've done, but it's obviously enough to provide an opinion on how our internal controls are doing, how our audit engagements are doing, and then they issue pretty much a pass with deficiency, or fail opinion. So for the year ended April 30th, 2019, we did receive a pass rating. So that is required to be included in all of our arrangement letters that we send out. So that was attached to the prior year arrangement letter and will also be included in the current year arrangement letter. And then we will also receive we will be up again in April 30th of 2022 for another peer review inspection. So we'll be going through that process again here next April. So that is kind of an external quality control procedure. We also have internal control procedures that we do. So each year we do have an internal control inspection or internal inspection procedures. And that's where other offices might come in and review work of our office, or we might review work of other offices. We look for any deficiencies or anything that, maybe wasn't meeting firm policy or anything like that. There was no significant issues during our last internal office inspection that came to light or anything like that. Not saying, Cedar Rapids didn't get picked or anything like that, but that's, based on a random pick of the higher ups involved with RSM on how they choose which engagements get picked. But usually within a 3-year span, all engagement leaders are subjected to get one of their engagements selected. So nothing that no material issues came to light out of that as well. So those are kind of the 2 areas of internal kind of quality control procedures we have. Obviously, federal agencies are coming in more and more often now, reviewing the single audit work that auditing firms have done. I haven't had one to my knowledge, but that is also another external quality control kind of procedure that the federal government does to make sure we're performing our compliance audits in conjunction with what's in the Single Audit Act and OMB circulars. So, and anything that comes out of those, any findings that come out of those are developed into trainings that we are all required to take. So we learn from our mistakes and move on. So
The federal agency that does that review is the OMB then?
the OMB is the overarching, the Office of Management and Budget. The actual federal agencies would be, maybe the Department of Treasury, Department of Ag, those departments that are actually giving out the money, or maybe the state departments as well that is passing through that money.
Okay, just curious more than anything. Thank you. Anybody else have discussion or questions here? So to sum up, then we will have the April meeting, we will have another engagement letter, right, to review.
Yep, and that'll be for the financial audit.
Okay, and then when will we expect to see this year the completed activity fund, just for everybody's knowledge?
I believe we have that scheduled to be done in April, and then I think we usually issue in either May or June.
So that's what we take when we go to the board, right? I think.
That's part of, that's part of our presentation to the board. We talk about it, but yeah.
Okay.
I think it's June. Generally, it ends up being in June, if I remember right.
Yeah.
But
It was June in the past.
yeah.
Okay.
Okay.
All right, then. Thank you very much for the background, and we'll look forward to hearing who's on the point person here.
Yeah, and I'll pray I have no more turnover.
All right. Thank you. All right, then, Dave, are we up to you?
Yes. So we have received any no complaints filed through our global our compliance reporting of any potential fraud or anything like that. Nothing's been reported, and so if we did have something, I would be sharing that with you. We have nothing there, but now here's a January local revenues report. And like I said, these are the local revenues for all funds. These are the revenues that were that we track for reasonableness and comparison to make sure that we know if there's something that's fallen off. We need to research and find out why it's fallen off and do an explanation, because that was an area when the embezzlement happened. It was in the local revenues side of things, and this way it does provide us a way to track to see if we have any areas that we need to look at to see if we have any problems. When you're looking at here, a lot of these haven't changed because we have a lot of COVID. You can see a lot of COVID here for the reasons, and there still is a lot of that. Transportation fees were down quite a bit, 49%, and that's due to our lost enrollment. We are down. Investment income, we're down significantly. You can see here in our general fund, we dropped our budget to $20,000 recently, and last year we had a budget of $400,000 and we brought in $332 at that point in time. So at the end of the year, I think our number was, if I remember right, was about $650. Then we dropped it to about $400,000 initially, and now we're dropping it to $20,000. So that's a huge impact on our budget due to the loss in investment income. Facility rentals are down in comparison, and we're down about 30% for that because we're not renting our facilities at this point in time. Miscellaneous refund of prior expense compared to the year before, we actually had an increase on that, and the reason why was we filed for a propane tax refund, so that was the big reason for that big difference. We hadn't been filing for that, and RSM actually helped us with that process. Sherry did the hard work on that and working with RSM to help make this happen. So we benefited significantly on claiming our prior refund tax. We also have some big numbers in here with regard to derecho reimbursement for insurance, the pieces that were general fund, a lot of employees' time, and there were some also materials and something equipment and different things that we lost that we have already received some reimbursement from insurance. So that number will continue to go up as the course of the year, we, that's kind of the big reason why we're seeing more income in that area.
Dave, can I ask a question on the derecho stuff? Will there be at some point audit procedures around the expenses and reimbursements associated with the derecho?
Because it's all insurance related. So I don't know if that will raise to a level of something that our auditors will look at. Most of the expenses are being paid directly from insurance to the restoration company. And so we get all the information, shared the information that is being submitted, but it's not flowing through our books at this point in time. What's flowing through our books is the expenses that we incurred that we're asking for reimbursement for. And there are going to be potentially some additional oversight that might happen with our FEMA for COVID with what we had through because we had, about $500,000 worth of FEMA dollars come through for COVID relief. But for the derecho, we have not filed a claim with FEMA because our insurance is picking up the tab of all the claims. So
That is an interesting point, though. And what I'm hearing, Dave, is you don't know if you think it's necessary to do a review.
I'm not sure it's going to raise up to the level because of the amount that's running through our books. Now, there's a lot of oversight that I'm sure EMC is doing to make sure everything is jiving from that standpoint, because you're talking $50 million for, the bulk of that is going to go from EMC, and EMC will not pay unless they have all the invoices and all of that correct, and they're handling that. So that's going to fall on the EMC side to make sure that they're paying for everything they need to be paying, and they're not paying for things that shouldn't be, but that's not flowing through us. We get copies of what's submitted, but we're not making the payments directly to the contractors. So,
Okay, EMC is the insurance company, right?
correct.
Okay. All right, thank you.
But each year, we develop unpredictability procedures, kind of, things that might not be of significance or material to the district, but areas that maybe are, unusual in nature, areas that could have a risk of concern of either fraudulent related or just a risk of error. So things like this, COVID, derecho, we always develop some procedures around that, either depending on, making sure the revenue is recorded correctly related to the insurance proceeds or gaining understandings of everything that happened. So.
I apologize. Who did ask the initial question about the derecho funds? Who was that?
That was Chad.
Okay, thank you, Chad. Are you comfortable with the answer?
Yeah, I'm comfortable with the answer and Chris's add on there as well. I did need a little time to wrap my head around the real impact there.
Yes. All right. Go ahead, Dave.
All right, so you can see there's another derecho reimbursement here, line item as well. Why we have such a big number here? That is in, like I said, majority of the work was being done by EMC, through the restoration company being paid by, but we did have some ourselves. And so some of it's in the general fund, some of it's in the PEPL fund. So this is our best guess of what we're going to be having coming through our PEPL fund with regard to some of the work that we did and getting debris removed and that type of stuff that we contracted out with some things. We contracted out with some of our additional work that had to happen to help secure some of our buildings that we had to do. We actually did up front. Some of that's coming out of this, going to be reimbursed through that as well. So we're working through that. A lot of these other ones here, you can see it's all COVID related. I mean, so much investment income, obviously, is still same thing. Nutrition fund, all the we are not serving as many meals as we typically would on a typical year, and we have not brought back. We've had, nutrition fund is an area that you get quite a bit of turnover in nutrition fund. And we were mindful of how many people we brought back because we knew we were going to be down. And so our expenses are down too, normally in comparison, but our revenue is down significantly compared to the prior years. And so we're really watching that closely. And like I say, this is the local revenue. A lot of our revenue that we're getting is through federal and state revenue, which is not listed here, but this is just a local. So when you're talking about a lot of our nutrition sales, we don't have a lot of our nutrition sales going on because all of our schools this year are there's no charges going right now through the pandemic. The feds are picking up all the costs for the meals. So that's not, so if you see some sales here, you might see some a la carte meals and stuff, but you're not seeing as much as we have in the past. Most everything is running through through our federal and state revenue because it's being picked up because of the pandemic. Daycare obviously is down some because we don't have number of kids in our daycare programs. So that's due to COVID as well. So that's kind of a review of the local revenues report that we typically do. As normal, this is our, what we've been sharing is our financials. Right now, you can see where our expenses are for January. Right now, in general fund, our revenues are exceeding our expenditures at this point in time, which typically will happen because we actually have a lot of expenses that happen in July and August for teacher salaries and expense. It happens in June's. So you can kind of see this typically where your expenditures jump up in June compared to the normal month. It's just a high spike. That is because we accrue July and August salaries for teachers in June, and then the expenses recorded in June. So this time of year, you're probably going to see revenues exceeding expenditures at this point in time. And right now you can see activity fund is running so far in a deficit mode this year, but we did have a balance to be able to draw from. And this is an area we will be asking the School Budget Review Committee, which is a governing body at the state, asking for some authority, which is modified allowable growth, which is which is a term that's used when you're determining you got additional authority money to support the expenses that you're making. We're going to be going to the School Budget Review Committee asking for authority to be able to transfer money from the general fund to support the student activity fund because they have expenses that are occurring, but they're not getting near the revenue that you're used to drawing in because of the limited gate receipts that they're getting. And this stems from the spring of last year all the way till now. And we will be going to the School Budget Review Committee probably in May, get the materials to May, and they'll have a determination in June. We're waiting to do that so that we can kind of figure out how much expenses that we have are incurring so we can do it hopefully in one time and not have to go back and do it again. That's why we're delaying and doing that. But whatever we end up transferring, hopefully we'll get authority to do so, then we can transfer those dollars, and then we'll actually have authority to back that transfer in the general fund. Management fund, right now we're showing a deficit, but we also have, this is all property tax driven, so we're going to get some money coming in here with the spring taxes. And that's another one that we're watching closely, is to make hopefully that we don't have a lot of delinquent taxes in the spring. We're anticipating or we're going to have some delinquent taxes, but hopefully, especially in our debt service area, hopefully we are going to have enough to be able to make our debt service payment. We're okay in management fund if there are some delinquent taxes because we have enough fund balance to absorb that. Debt service looks like we have enough fund balance right now to absorb that. We probably do. We have a bond payment that's due, final bond payment, it's a GO bond. Our final bond payment is due this year, and hopefully we have enough money to be able to make that payment. And so you can kind of see all our other funds are still sitting pretty good. Our PEPL and our sales tax fund, we are have more revenue than expenses, and so we're doing pretty good in our other funds, except for nutrition and the daycare. We talked about that. We're in a deficit mode right now, so we're watching that. And this might be another area where we might have to consider supporting our enterprise funds with another transfer of funds from ESSER or CARES Act money. That might be something we end up having to do. We're watching that, and we'll make a determination later if we need to do that or not. So,
Do you have to go and get permission for that as well, Dave?
if we're using ESSER funds, we really need to do that. Doesn't require school budget review to transfer those.
Okay.
But we will, if we do end up transferring, we will ask the board, get the board's authorization to make that transfer if we choose to do that.
Okay.
And last year, we did do a transfer last year, a much larger amount, but because of the summer feeding program was so popular last year in the summer even, we actually brought in a lot more money than we anticipated. This year, you can tell, we're running a deficit now, but I don't know if we're going to be able to recover all of this like we did last year. So we're watching that closely.
Okay. So Dave, I also see you have a note here about audit report bound copy ?
Yes, that's a question for the audit committee. We actually have a number of hardbound copies of our audit if anybody would like a hardbound copy. If you would like a hardbound copy, please, you can let me know and I'll get that information to Sherry. You can let me or Sarah know. We'll get that information to Sherry to say, hey, such and such wants a hardbound copy. It's always on our website as well. You can find it on our website by going to our website and going looking under accounting, and you can kind of see that you can find it on our website, and you can be able to actually see a copy of that, and then you can download it from there as well. But if you want a hard copy, you're more than welcome to have one.
Okay. Thank you. And do we have time for the Des Moines Register article or not?
We only have 4 minutes. We talked briefly, just, hey, we had this, and we could keep it on the agenda, and because I'm not sure we do it any justice with 3 minutes left to talk a whole lot of detail of this. I'm not sure if people had a chance to read this from last time, the article, but it is interesting what transpired there, and with relationship to a third-party vendor they're working with at Des Moines Public Schools. So,
all right then. I would encourage you also, we're down to the last item on our agenda, I believe, 9, which is the meeting evaluation, and our agreed upon procedure right is we send it to Sarah if anybody has comments, or to me. I can't remember now. Who should they send it to?
Usually they funnel through you, so you can see them first.
Okay,
Then
that's fine.
Hey, and Maureen, just another note real quick while I have you on here. The AUP, agreed upon procedures, I will actually, once I get that from RSM, I'm going to send it to you so you can get your signature on it. If you could get that and scan it back to me, that would be great.
Okay, like we did before, right?
Yes.
Okay.
Yeah. So
That sounds good.
thank you.
Sounds good. Anybody else have anything? Hearing none, I'd like to have a motion for adjournment, please.
I'll move.
So
to
moved.
adjourn. Okay,
I
I'll
have-
second Drew ones first.
So do we have a second?
I'll second.
Thank you. All right then, all those in favor?
Aye.
Aye.
Thank you, everybody.
Thank you so much, everybody. Good meeting.
Thank you.